Ladies and gentlemen, welcome back to the channel. The S&P 500 down about 0.71% today, so not as bad as some Fed meetings that we're used to, where you get that initial bullish reaction after the Fed press conference, and then that next day is a 3 to 5% down day. We're not exactly seeing that, but we're at extremely low levels. We're sitting at 374.60 on the S&P. This is about 10 points off of the low for the year. So we're basically at the lows of 2022 yet again, and what the Fed did was really throw the kitchen sink at the markets, especially in the way that they're predicting the GDP to go, the unemployment rate to go, and inflation to go by the end of the year and over the next coming year. So we're going to talk about all of this information. Will this be a continuing downward drag on the markets, or could we possibly have a bounce on the horizon? That's what we're going to talk about, as well as that AMC stock is down about 9%, hitting a new low for the last couple of months, and Ape is also at a brand new low since this thing did start trading on the public market. So let's get straight into this information. First and foremost, with what the Fed said yesterday, and the three most important things is the GDP. The Fed said really over the next couple of months, 2022, we're going to end on a positive 0.2% GDP print, which is pretty reasonable after all, considering what we've really seen, a lot of that back and forth, right? The last GDP report was negative. The one before that was negative. So really, in theory, the Fed's saying the next two GDP reports are probably going to be slightly on the positive side and end us with a slightly positive gain for GDP for the year, which is pretty reasonable. But again, if the Fed is saying, expect 0.2% positive GDP, that's a lot different from the last SIP, the Summary of Economic Projections, that we got back in June, when the Fed said expect GDP to be about 1.8% positive for the end of the year. So they threw the kitchen sink at the markets, especially regarding GDP. Now, what the Fed said as far as interest rates, the Fed said to expect over 4% interest rates by the end of this year, and to expect interest rates around 4.6% for next year. So there's the little bit of bad news and good news. The bad news is the Fed basically confirmed that we're going to get either two 50 basis point rate hikes back to back from here, or at least a 75 basis point rate hike, and then a 25 basis point rate hike from here, and then maybe another normal rate hike or two for next year. That's the thing, is we're going to get a lot more tightening here in the short term, but really 4.6% interest rates, it's not too bad for next year. That means we're going to see a pause at some point, and that's really the thing that I want to highlight here in this video, that while the Fed's going to keep raising rates here in the short term pretty extreme, we're going to get a pause in 2023. So it gives us an outlook to look forward to say, hey guys, at that November or December meeting, when the Fed does announce a pause, that's probably when we could see some pretty good upside. But until then, we're probably going to be range bound here at the lower end range of 370, 360 on the S&P 500, and the higher end range of about 390. I really don't expect us to break out or really break down in a big way unless something new happens that we are, unprepared for. That's a gray swan, a black swan, something like that, something with Russia, who knows what else that can happen that could spook the markets. But as long as nothing like that does happen, from what we know right now is we will get a pause, and that will be announced towards the end of this year. Now, on the other note, the other thing that has people somewhat concerned, and really I think this Summary of Economic Projections and the fact that nobody dissented or voted against this 75 basis point rate hike after so much tightening has been done really shows a couple things. The Fed is unanimous, the Fed is serious, and the Fed is being a little bit more realistic this time. They're not trying to say we're going to see an 1.5%, 1.8% GDP a year for 2022. They're not saying they're going to slow down raising rates anytime soon, and they're also saying that they expect unemployment to reach about 4.4% by 2023. That would be a sharp increase from where we currently sit at about 3.3%, and that would be indicative of a recession. And that's the question Fed Jerome Powell was actually asked yesterday is, since you guys see unemployment rising so sharply, that would be indicative of a recession because unemployment usually does not rise that fast. And the Fed basically agreed. So the Fed's saying there is some pain ahead. We're not going to expect blowout growth for the next 4 years or so. We're not going to expect inflation to come down all too fast. We're expecting 2% inflation by 2025. So it's going to be a long road ahead, and that's basically what this Fed report did say. But there will be pauses along the line, and if the economic situation gets much worse, much quicker than what the Fed expects, and inflation comes down much quicker than the Fed expects, there can be a U-turn, and I think that is a little bit of the silver lining. So as far as what to expect ahead over the next couple of days, couple of weeks, couple of months in the markets is that choppiness. I wouldn't underestimate the market's ability to get something positive, some bit of positive news, and to really see the markets take off on that, because the Fed will be slowing down raising rates at some point over the next 3 to 6 months. Typically, when the Fed slows down or pauses their interest rate hikes, that's probably the best time to be bullish, and the second best time is probably today before that happens. So that's really the big thing out of yesterday. And like I said, guys, we were selling off into the actual Fed meeting. We sold off yesterday, sold off today, and that's why I think we really didn't get one of those knee-jerk reactions, those 3 to 5% down moves the day after the Fed. It's because we've already dropped so much. And if you look at some of the options market is completely broken. Things are so expensive, it is ridiculous. So it's kind of hard to even make a logical trade here that makes sense on a risk to reward basis. Now, as far as AMC stock, not too much else to actually report, so we're gonna go get straight into the Ortex data here today. And if we're looking at AMC, we're looking at the cost to borrow max. That's sitting at 18.33%. It's been there for the last couple of days now, hasn't moved around all too much. Yesterday, it looks like the cost to borrow max did hit 42.61% for a good majority of the day, back down to that 18% level though. Cost to borrow average at 17.29% and cost to borrow minimum at 15.91%. So nothing too crazy here, but still numbers that are very respectable, right? If you do see a bounce in the markets, AMC stock probably going to play along at that, and that cost to borrow max is really going to eat away at your gains if you're a short seller. That's just simply how it works when you're paying out interest on a position that you have not closed out of yet. Now, the short interest dollar amount is sitting at $853.19 million worth of short positions on AMC stock, and take this with a grain of salt because it says 7 days ago we were at $995.68 million worth of short positions on AMC stock. So they're trying to say $140 million worth of shorts on AMC was actually covered. That is not true, especially over the last 7 days. You have seen zero indication of shorts covering in any capacity at all. Actually, the complete opposite. You've seen a lot of shorts taking on brand new short positions. Look at today, down 9.5%. If you were going to sell AMC stock, we're long past that at this point. The shorts have taken over in regards to the daily price action moves. The shorts, the trading algorithms, anything along those lines, that's what's really driving the price of AMC stock here when the markets are this fearful. Now, the short interest, the estimated short interest sitting at 19.25%, the free flow out on loan at 35.69%, and shares out on loan 183.9 million. Days to cover 4.17, cost to borrow 17.47%, and 100% share utilization. So not looking all too bad in those regards. And as far as the option activity, you're seeing 6 orders totaling $188,000, positive order value of 66%. So also not looking all too bad. A positive order value over 50% is going to indicate more bullish dollars heading into AMC options rather than bearish dollars. Now, if we take a look at APE, cost to borrow average at 6.85%, cost to borrow minimum at 11%, cost to borrow cost to borrow max at 11%, cost to borrow minimum at 4.72%, $110 million worth of short positions on this stock. Estimated short interest of free float at 5.37%. Free float out on loan 5.45%. Shares out on loan 28.1 million. Days to cover 1.24. Cost to borrow 7% and 78.22% utilization. Now this stock is down about 13% here today during this risk off sell-off in the markets, and it doesn't surprise me. And like I've said for a while now, I think AMC would be the real trade if things really do pop off with this genre of stocks, with the momentum stocks, or with AMC in general. I think AMC would lead the way instead of APE, but maybe I'm wrong there, and leave your comments on that down below in the comment sections. Would love to hear why you prefer APE over AMC if you are someone that does. Now, if we're looking at tomorrow as far as economic data, tomorrow being a Friday, we don't have all too much. You do have retail sales out of Canada. You do have S&P Global Composite PMI for September and manufacturing PMI for September. But we do have Fed Jerome Powell that speaks at 2 p.m. tomorrow, and that could definitely spice things up heading into the weekend. I'm not sure if this is a pre-recorded statement. I'm not sure if this is, questionnaire kind of style, but either way, when Fed Jerome Powell speaks, it will move the markets, and especially after this reaction that we have seen here over the last 2 days or so, has definitely been a negative one. So depending on what Fed Powell does say, I think that will be key, especially around unemployment and when they could pause raising rates, because it's pretty clear at this point the Fed wants you to know they will pause rates at some point over the next 3 to 6 months. Now, as far as a technical look on the S&P 500, it looks very, very bleak, right? The low is 360.69 back here on July 17th, and you're heading back down to that. You're about 13 points off of the low as of right now, just really one bad day away from new lows for 2022. So I do think at this level you're prone to go back down to those new lows, maybe break some new lows, or possibly see a ferocious bounce. Even back up to the 390 range is definitely not out of the cards for the S&P 500, with the RSI sitting at severely oversold levels and the MACD at extremely pessimistic levels as well. It's not going to be too hard to get that kind of bounce. Now, for AMC stock faring a lot better than the S&P 500, the low for 2022 coming in at May 12th, 2022 at $5.96 per share. You're sitting at $7.76 per share. So relatively speaking, doing much better than the S&P 500 relative to the low that we did see. Now, I really want to watch this level to see if we can close above $7.84 per share. We're sitting at $7.76 at the time of recording this video, with about an hour left of trading, because that would be the low that we touched right here on September 7th. If we can just come back up and close above that, that would be a very bullish sign. If we can't, then I'm looking for a move above that for tomorrow, and at the very least, it would be a positive thing to see AMC stock close above $7.61 per share. That would be the lows we've seen back here around early July. So not all hope is lost. We did see that bullish reaction about a week ago, 2 weeks ago, and now you're starting to see a little bit more of a negative reaction as of right now. The RSI extremely oversold, and the MACD is fighting between positive and negative. Like I said, it's been a roller coaster ride over the past 2 weeks or so, and nothing is coming out of that is indicative of, a rally or a drop from here. But days where AMC stock is down 10% like it is today are usually followed by some pretty good reversal days over the next couple of days, right? You don't tend to fall 10%, 5-10% day after day after day. You tend to get a bounce day and see some of those losses actually get made up for. So that is pretty much going to be all for this video. Nothing really else to add. Some news out of Russia that people are really not against this mobilization wartime effort. There's protest, a couple things like that, a new climate bill, but nothing that is moving the markets in the way that Fed Jerome Powell is as of right now. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. But most importantly, you guys enjoy the rest of your day, and I will see you in the next one.